Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Friday, October 25th, 2019. We're in the final trading day of the week and also the final trading hour of the day. As I mention each day, I believe that the prices, as close as you can get them to the close of the market, are the most valid prices, and that is because during the daytime you have the market makers, you have the day traders, they're battling it out. I consider it a lot of noise during the day. At the end of the day, particularly in the last hour, the large financial institutions come into play, the market makers come into play. They're the most well-equipped, best informed, best technology, funded the best, well-funded, and they come in, and in my opinion, they move the market to what they believe in the aggregate is the most valid price of the day. And therefore, those are the prices that I want to make my buying and selling decisions from, just as close as I can to the close of the day. So anyway, thank you all for coming by today. I appreciate it. I always appreciate you investing your time here. I hope you're getting some kind of return on your time investment by what I teach, and hopefully it's helping with your trading and or investing. So anyway, just want to make sure that everybody can hear me, that we're coming through loud and clear. If you don't mind, just say hi, just so I know we're coming through before we get started. Market having a big day today. Dow Jones up 151 points, up about 0.5%. The Nasdaq is up 48.79%, or 48 points now, 0.6%, and the S&P is up 11.6, about 0.39%. So having a pretty good day. We had some news come out that looks like there were some hurdles that were taken care of with the trade negotiation, but we never know about that. So anyway, we will take it today. All right, Jackson's here. How you doing, Jackson? Good to see you, my friend. Thank you for coming by. And John, hello, sir. How are you? Nice to see you. Thank you so much for coming by. So, yeah, well, listen, we're having a great day. We are really having a great day. Oh, Joshua Kaufman, first time. Thanks for putting this on. Well, thank you, Joshua. Appreciate you coming by. Yeah, I don't recognize your name, so this does look like the first time I've seen it anyway, but thank you for coming. And Joshua, if you have any questions as we go through, please just let me know, okay? So, all right, the plan for today, as usual, first of all, we're going to go ahead and run the U.S. legal disclaimer. Once we're done with that, we're going to come back. We're going to take a look at all my current positions. We're going to talk about when I bought them, why I bought them, and how I'm going to manage them going forward, either to the upside or to the downside. After that, we're going to do a few minutes on trader psychology. I say this every day, but the most important skill you can learn in trading is managing your emotions. It is a skill. When the market's been going up like it has been, it doesn't take a lot of skill. It goes up, you're happy with it. But listen, when the market goes down, and it will go down, I promise you, I don't know when, but it will go down. We will go through a drawdown. That is when your emotions are going to start to get turned up. And when the market goes down, your emotions start to increase. That is when people generally do things in trading that they're not supposed to do. They hold on to losers too long because they don't want to be wrong about the trade. They double up, triple up on positions. They take subpar setups. And so, when everything's going great, not that hard to manage the emotions. But when it is not going great with trading and you have a drawdown, you're going to run into this, I promise you. And that's when you really have to dig deep and not make any bad decisions. And that is just a function of trader psychology and managing your emotions. So we're going to do a few minutes on that. After that, we're going to go through my watch list. We're going to look through each stock one by one. We're going to take a look at all the support resistance levels. We're going to look at all the indicators. As I mention each day, I look at indicators on the chart as potential groups of buyers. If this indicator signals, I look at that as a group of buyers. If another indicator signals, I look at that as a group of buyer or sellers, right? And so to put yourself in the position where you have the greatest chance to make a profit on your trade, the best thing that you can do is be with as many groups of buyers as possible. And so that's why I like to look for a confluence or a combination of indicators that line up at the same time, because the way I look at that is I'm looking at that as multiple or several groups lining up together at the same time. And again, if you want stock to go up, you want to have as many groups of buyers as possible. So that's what I'll be looking for when we go through the charts today. The first time we go through the charts, I'll mark off some specifics, but then at the end of the day, as we get closer to the end of the day, we'll go through those potential candidates that I marked, and we'll go through them with a little finer tooth comb to see whether or not I want to enter that position. And even if we have a great position that we see today, doesn't necessarily mean that I'm going to take it, because I have to analyze that position vis-a-vis my current positions. If I have too many positions in one category of business, then I maybe don't want to add a third, because I don't want too much correlation. And then even if we find a really good setup, I also need to take a look at the risk to reward ratio too. So, you have to look for good setups, you have to look for multiple indicators, but then you have to go over it with a fine tooth comb, and you have to look at the risk to reward. That's going to impact your decision. And then you have to look at your current positions as far as, am I just adding another tech stock on top of the other tech stocks that I have? So, that's what it takes to be a good trader, everybody. You have to analyze all of these things, not just a setup, but you have to look at it in the aggregate. And then if I do find something that fits all that criteria, then I will go ahead, buy it at the end of the day. And then after the market closes, if you have any questions whatsoever, please let me know. If you need some clarification, please let me know. If you'd like me to take a look at any stock symbols, I'm happy to do that, give you my humble opinion. And if before the market closes you have a stock symbol that you think would be of value to the group, please let me know. Maybe put a star by it or an asterisk by it, so I know it's time sensitive, and then I will take a look at that, hopefully if I have time before the end of the day, and give you my opinion on that. So all right, that's the plan for today. So if you could hang tight, and I will be back in about 40 seconds. Thank you.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right. Hey, JT is here. Good to see you, sir. Hope you're doing well, and thank you for coming by. Gamer Squad, hey, what's going on, man? Good to see you. Thank you for coming by as well. He says, hi, everybody. Murat, hey, how's it going, Murat? Murat's our friend from Norway. Always glad to see Murat. Spy up, volume down. Let's take a look. Yeah, the volume is down today for sure. I mean, John, you do know at the end of the day, we may get twice as much volume as you're seeing now. That is because there's so much volume that comes in the last 5 minutes of the day. So it is pretty low now, but let's take a look at it at the end of the day and see where it is. But yeah, it's low. Yeah, there's no doubt. And we have a breakout here. We have a breakout on low volume, which, my opinion is not particularly bullish. So we're going to have to, we'll factor those kind of things in, but the volume will be higher at the end of the day. But is it going to be big? I don't know. It doesn't really look like it at this point. So you're 100% right. John Cortez, hey, how you doing, sir? Good to see you. He says, good afternoon, all. Good afternoon to you too. Murat says, before you move on to the list, can you take a look at oil? Yes. So when I look at oil here, this is the USO. This is the tracking. I'm not looking at futures or anything like that, but well, pretty strong, obviously, right? MACD is positive. We've had a big move up. We are getting pretty extended in the ATR channels. I mean, we're getting up close to the 200-day moving average. You know, very likely we're going to have some kind of resistance up there. Third ATR channel is above that. As you know, 90% of prices tend to stay above the negative third ATR channel, just like they bounced here. And so if we get up here, I wouldn't be surprised if that was some resistance, especially since we have the 200-day here as well. But of course, you never know, right? Those are just guidelines. Are you long oil, Murat? Short oil? What's going on? Okay, and John wants to look at BSTC. Well, looks pretty decent. Looks pretty decent. You know, we were under the 30 RSI yesterday. Today we're back above the 30, which just that by itself offers you a good risk to reward, right? If you're wrong, closes below 30, you just get out, but it gives you a nice possible reward up to approximately the 50 RSI. Let's see where the 50 RSI would be here. That would be for Monday. And then under the 30 RSI tomorrow or Monday would be right about here. So, you know, you tell me if you bought here today at the close. If you bought here today at the close, your theoretical risk, it could be more than this, of course, but your theoretical risk is from here to here. Your theoretical reward is from here to here. So it looks like a really good risk to reward. And on top of that, we had a V1 yesterday, strong move up today. It looks like we might close over the 5 EMA, which has not happened for a long time. I mean, it happened up here, I guess. Has it closed above the 5? No. So, you know, this kind of looks like maybe something's changing here. So, yeah, that looks pretty good, in my opinion. Oh, you were short, then you're long. Okay, good. Well, I'm glad to hear that you're long since it's up today for sure. Hey, Mount Doji, what's going on, brother? Good to see you. What's going on with Mount Doji? Any positions? All right. Well, let's get started here. We're going to go through my current positions. Okay. Remind me of that. Okay. Remind me of that, and I'll take a look at LL. All right. So here we go. Etsy. I did buy Etsy yesterday when we had this nice V1 entry right here. We went above the value zone. We came in for 2 days. We kind of held this range. Then yesterday we washed out. The day that or 2 days ago, it washed out. Yesterday it washed out that low again, closed above that low, giving us a V1. Also closed above the 50-day. Or I'm sorry, closed above the 20 EMA, closed above the 5, closed above the 50 RSI, which was all good. So I did buy a position here yesterday at 57.75, and it has moved up nicely today, and we have hit one profit target, so it's up 1.49%. Pretty decent. Earlier in the day, not so hot tamale, but it looks like it's finishing strong at this point, so I'm very happy for that and took one profit target out. Going forward, 70 RSI is way up here. So, you know, if we just go up, march up without it going down whatsoever, and it rejects the 70 RSI, I would lock in profits there. Of course, I'd be phasing out all along the way. If we get up here to my ultimate profit target, I would be completely out of my shares. If we get up to the 100-day or the 200-day moving average and we reject it, maybe close below, something like that, that would be a red flag, and I might take off all the profits over there. We do have earnings back here on the 30th, or coming on the October 30th, which is Wednesday after the bell. So regardless of what happens, I'm going to have to get out of this before earnings. So anyway, looking pretty good. Yesterday was the washout bar triggering the V1. My stop at this moment would be a close below the halfway, but really glad that we took some profit off here. Always like taking that profit, right? Put the money in your pocket. Market can't take it away from you. And if it does head back down, you know, you're going to mitigate that loss because you've taken profits off higher. All right, IWM. I bought IWM way back here on the 15th of October, close above the 200-day moving average. If it closed under the 200-day moving average, I would get out with a small loss, theoretical small loss. At the same time, it closed above the 200-day. We also had a MACD crossover, which, you know, strengthens the position. You heard me talk earlier about having, you know, multiple indicators. Well, the two indicators were the MACD crossing and the close back above the 200-day moving average. If we had a close below the 200, I would go ahead and just get out for a small loss. But we were fortunate that it has moved up our way nicely. And, you know, on these kind of big move up days, you know, I've taken off portions of, you know, I definitely took a portion here. Definitely think I took 2 portions here, did hit 1 profit target here. So I have about, I have phased out of about half of my shares, almost exactly half of my shares from here up to here. So it's moved 1 ATR away from my entry. So at this point, as soon as it moves 1 ATR away from the entry on discretionary trades, you know, I'm going to look to tighten up my stop. And my stop at this point would be a close below today's low. Conversely, if it moves up higher, this orange line here was the previous high. If we reject that, that would be a red flag to get me out. The blue line is the 70 RSI. If we reject the 70 RSI, that would also be a red flag to get me out and lock in profits. My ultimate profit target's all the way up here. So if it does move up, I'm going to be phasing. I'm going to be watching out for these red flags. If it moves up, if it continues to move up to the downside, close below the previous day's low, that would be my signal to exit the position. But anyway, 1 profit target here. Really glad for that. And yeah, this has been a great trade. Hey, Steve Burns, good to see you, my friend. Thank you so much for coming. Always an honor to have you here. It's always exciting for me to have you here, and I know it is for everyone else. And thank you so much for including me on your list on Twitter today. Always appreciated. Thank you very much. Steve says, what a bounce on Amazon. In the after hours last night, it was oversold at 33 RSI. I know, Steve and I traded a message there on Twitter, and we were talking about it. I was actually looking to buy Amazon. I was like, man, that's going to be a good setup. But, you know, it was during the after hours, and I don't buy after hours, and it had a huge rally. So anyway, good for Amazon shareholders, and I'll just have to wait for another entry. Jackson says, what's the ultimate profit target on IWM? Well, you and I haven't got into this in the lessons yet, Jackson, but it's my ultimate profit target when I phase out is always the 6th ATR. All right, what are we on to next? Silver. Well, I'll tell you what, this was a pretty sweet trade. I did take it yesterday on silver SLV, not AGQ. AGQ is the double leverage. This is SLV. We had the 5 cross over the 20. I did buy it at the end of the day. I phase out, like here were my phase outs, here, here, and here. You can see I hit 3 of them. However, when you have a limit order, it says, sell at this price, no lower, but you can sell higher. It opened up here. So I hit all three of my profit targets right at the very top. So I got out of 40% of my position on silver with a 2.5% gain, which was unbelievable. And of course, at this point, I'm really glad that I did phase out because, like I said, I got out of all three of my positions right here at the top. And of course, it sold from that going. It is sold to the downside now. So this is a bearish reversal bar. We have the close is above the yesterday's close, but it's below the open, which is kind of a bearish signal, honestly. But this is a mechanical trade, completely mechanical trade. I don't have any discretion here. I'm going to stay in this trade as long as the 5 EMA stays over the 20 EMA. I'll continue to phase out to the upside if it continues to move up. My stop will be, if it goes to the downside, my stop will be a 5 closing back below the 20. But like I said, I got out of 40% of my position way up here. So even if it does go crashing down, it will only be on 60% of what I have left. Take away what I phased out at the very top. So this was this was a fantastic trade. Also yesterday, in addition to having that 520 cross, we had the MACD crossover, which is also good. But it's hanging in there. It's well off of its lows for sure. So 40% out today, right at the very top. So this makes this trade pretty easy going forward as far as position. But I am going to stay in this completely mechanical. I do like to have mechanical trades. I do like to have discretionary trades. Generally, my discretionary trades are mainly based upon stocks. My mechanical trades are based upon ETFs because we don't have to get out of them because of earnings. All right, all famous SPY trades. So listen. I know you guys hear this every day, but in case we have some new viewers today, I do want to mention why I do buy the SPY every day at the close and sell it first thing in the morning. This is from Lizanne Saunders at Bespoke Invest on Twitter. But this is a good long-term back-tested approach to trading the SPY. You have two options. First option, you can buy the SPY each day at the open, sell it at the close. Buy at the open, sell at the close. If you did this every day since 1993, you'd have returned a negative 13.9% for your troubles. If you did the opposite, which is what I do, and buy the SPY at the close each day and then sell it the next morning. So buy at the close, sell in the morning, buy at the close, sell in the morning. Every day since 1993, you'd have actually returned a positive 634.2% return. And what this means, if you can get your head around this, all the gains in the S&P since 1993 have come in people bidding it up in the aftermarket, bidding it up in the pre-market, and selling it into the open. So I'm always fascinated by this, but past performance is no guarantee of future results. Of course, we know that's true on any trading approach. The blue line is the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. You can see the buy in the afternoon, sell in the morning far outperforms the opposite of buying in the morning, sell in the afternoon. This is a great example of a chart that shows what it looks like when you have an edge in trading and it plays itself out in the long run, right? There's ups and downs, there's bumps and bruises in between, but these are completely normal, completely to be expected. So, imagine if you would have started here. You're like, this is the worst trading approach ever. Well, if you stuck with it for the long term, it showed you that it wasn't. But the key takeaway here is position size correctly. I use a 10%, maximum 10% position size of my capital. So if I had, $100,000, I would buy $10,000 of the SPY each day at the close, sell that 10,000 first thing the next morning. But, this chart does show you have ups and downs. It's just a normal part. That's why it's important not to position size too large, because imagine if you would have position size too large here, you lost a lot of money. You're like, I quit, I'm out of here, and then it takes right off. So anyway, with that being said, small loss today on SPY. I did buy it yesterday, $337. Sold it this morning, 299.74. So lost just under $1 on this, but that's how it goes. And then the market took off. So this would have been one of the ones, buy it the morning, sell in the afternoon. Looks like it would have worked out better today. But if you do the statistics and you look at the results from 1993, like we just looked at, buying it at the close, selling it the next morning is really the way to go. So a little loser here. Yesterday I did hit an all-time high using this approach. This has worked out really, really well, but it doesn't work all the time. You have to take the long view. In the month of May, this approach lost about 80% of the time. I think I lost 80% of my overnight trades in SPY and with the overnight trade. And if I would have position sized heavy starting in May, I was like, this is the worst approach ever. But I took a conservative position size, I let itself play out, and it played out. So anyway, small loss on that today, but I will be buying this again at the end of the day. All right, Qs. So this is a mechanical trade. I took it when the 5 EMA crossed over the 20 EMA. Mechanical approach. Same time that happened, we also had the MACD crossover, which is also another indicator. So good combination of indicators, 5 crossing over the 20, MACD crossing over, the price being in the value zone between the two green lines when it happened. Like if it crossed over today up here, no way would I take it. I don't really like to take anything above the 1 ATR channel, maybe 1.5 ATR channel maximum. But I have been phasing out every time it's gone up. Hit 2 profit targets today, which is really great. So mechanical trade now. I'm going to stay in this. If we get up to the ultimate profit target, I will run out of shares and I'll be done with the trade. If the 5 crosses back below the 20, I will be out of the trade for my stop. But at this point, I'm out of about 60% of this trade, all at profitable levels. So anyway, really nice trade. 2 profit targets today. All right, Walmart. Walmart is my short trade. I have not had a lot of short trades on this podcast. I've had a total of 4. I'll show you real quick why I did short this. But here we have a high, and the MACD bars, even though these high MACD bars don't line up at this previous high, I look at this as one entire leg. So we have a high with the MACD readings on this move, very, very high. We have a sell-off, we come back up, we make a higher high, but look how high the bars were here, not even close to here. So this is showing a lack of momentum. This is called a double top with a bearish divergence. Just because you have one doesn't mean you go ahead and short. We had a false breakout the very next day. I didn't short it here. I waited for some type of counter rally, which we had. It was a lower high counter rally, went down on big volume. The next day, we attempted to rally halfway into this bar. I suspected that it wouldn't go any higher than halfway of this bar, and I was right. The next day we had a V1 to the downside right in the halfway of this big down bar, so that was my signal. As you guys know, I do phase out. The next day it went down. I locked in, I think about 18% down here, then it rallied. Next day, locked in another 18% down here, then it rallied. Today, locked in another approximately 20% down here, then it rallied. But you see how we hit the 50 RSI today? We bounced off of the 50 RSI. We rejected the 50 RSI. So from a short position, that is not where I want to be. I mean, if we buy at the 30, if we go long at the 30 and it rejects the 50, that is my signal to probably lock in profits. Well, because we are short and it bounced off the 50, because that 50 is going to act as support, because it bounced off the 50 and rejected it, I'm going to go ahead and just lock in my profits on this trade. But it was good, you know. All in all, I think it was close to 55%, something like that. But profit target here, and you can see one profit target there today, and it is down today. So anyway, this has been a good trade. We've had four short trades, and 3 of them have been winners, and 1 of them was a loser. So anyway, our stats pretty good on that, and glad that I could show you an example of a short trade. Okay, so this is the time of the podcast where I like to do a little bit on trader psychology, psychology topics, trading words of wisdom. You know, there's some really good Twitter channels out there, and they specialize in putting out good trading philosophies, talking about emotions, like I said, trading words of wisdom. And one of the very best is Thomas Paine. Thomas Paine at Trader T Paine. If you guys haven't subscribed to Thomas, you really should on Twitter. He has excellent information having to do with psychology. It's just really, really great. But actually, Thomas here, and this is kind of recent from yesterday, but Thomas said, he's replying to me, saw your Twitter analysis. If you guys remember, Twitter had the big 20% down, 21% down. And Thomas says, holding a stock as it splits open is like standing in front of a tornado and hoping it turns around before it takes you out. The stock might stabilize and bounce back, but is it worth the risk? Taking a small loss instead of risking a catastrophic one. So, you know, his point there is, you know, on Twitter, when you have a huge down day like this, and, you know, I call these skyscrapers, but when you have an outsized, huge, horrific move to the downside, of course you don't want to get out if you're long. You're like, well, now it's low. I don't really want to, you know, why would I sell now? But, you know, what Thomas is saying here is, you know, look at this as a big tornado coming your way. Yes, it might turn around and go the other way, but is it really worth the risk to just keep standing in front of the tornado? I mean, obviously the market did not like what Twitter did at all. If it would have liked it better, then it probably would not have gone down that far, you know. And if we look at Amazon, okay, so Amazon was also a tornado, but at the end of the day, the market did like it. So it makes a little bit of a difference here, that compared to Twitter, right? Because here it closed on its low. So the whole takeaway here, guys, is if you're holding a position and you really like the stock and all of a sudden it goes against you in a huge way, you know, his analogy here of like holding a stock as it splits open is like standing in front of a tornado and hoping it turns around before it takes you out. The stock might stabilize and bounce back, but is it worth the risk? You know, you're better off taking the small loss instead of standing in front of that tornado. Because what about if the tornado does keep going down, right? So, you know, Market Wizards, you know, people they interview in the Market Wizards series, I can't remember who it was, but he says, look, if there's a huge move against me, I just get out. I don't think about it. I don't hem and haw about it. The market has spoke. The market has told me it does not like it, and probably the market is right and I am wrong. So don't stand in front. If you have a position that really goes against you, and I'm telling you this from experience. WorldCom, Enron happened to me. I decided to stay in front of the tornado, and it was not a good idea. So I'm talking from experience, but I know it's hard to do. I know it's hard to do. So thank you so much, Thomas. And if you guys haven't subscribed to him at Trader T Paine on Twitter, I really would suggest it. All right, let's take a look here. So Etsy's doing great. Come on, get up there, hit that second profit target. That would be good. IWM, good. Silver, great. SPY, small little loss. Be buying that at the end of the day. The Qs, 2 profit targets, and Walmart is down. So we're 5 to 6 today. Not too bad, huh? Jackson says SLV trail stop as you take profit. Well, Jackson, on this particular trade, it is it's a mechanical trade. So I'm not really trailing the stop on this, but in a way, the way I am kind of trailing the stop is by taking profits as it moves my way because it reduces my position. But I'm going to hold this. It's a mechanical trade, so I'm going to hold this as long as the 5 stays over the 20. If it keeps moving up, I'm going to continue to phase, continue to phase, continue to phase. until I'm out, or the 5 crosses back below the 20. But it'd be difficult. I'm not tempting the fates here, but it would be difficult to have a losing trade on this, especially that I got out 40% up here so high. Steve says Tesla is going to jail for running over and killing the short sellers. I thought the same thing, guys. Can you imagine? Tesla, I believe, is the most heavily shorted stock in the stock market. Can you imagine yesterday's move, and then on top of it today another 9%? Shorts lost $1 billion on Tesla yesterday, and who knows how much today? Maybe another $500 million. So, this is a good example here too. If you were short, that's the tornado, right? The tornado hit you yesterday. And if people that stood in front of the tornado today got run over by it again, I'm telling you. So it's good advice, guys. If you have a huge, big, outsized move against you, it's generally very bearish, and it's probably good advice just to get out and step away from that tornado. That's right, Steve. Randy McKay. That's who it was. Thank you. He was interviewed in Market Wizards. When I get hurt in the market, I get the hell out. It doesn't matter at all where the market is trading. I just get out. That's exactly the quote that I was thinking about. Randy McKay. So, look, these guys are market wizards. They know what they're doing. So when they say something, it's probably a good idea to listen. Hey, Jesse, what's going on, brother? Good to see you. Thank you so much for coming by. Oh, okay. LL. Sorry. LL is one of those ones that I can't look at on that chart. Let me look over here. Yeah, that looks good. Oh, man. Yeah, I mean, look, we came up here, we've come down, sideways, and beautiful V2. Looks like the RSI is 51.19 above all the moving averages. I like it a lot, Mount Doji. I like it a lot. Mount Doji's got the eagle eye for these like sweet setups. Yeah, I mean, it's a beautiful V2. I mean, sideways movement, everything that we're looking for. All right, we better get to it, otherwise I'm going to run out of time. All right, Apple's a rocket ship, man. Apple should also go to jail for running over the shorts. This thing has gone crazy. It's just too high. I can't buy it up here. I wouldn't even dare think about shorting it. I wouldn't even dare think about buying it. It could go either way. I just have to be patient on this one. Look for some kind of pullback if and when it comes. We have earnings coming out. That might be the time. Apple, in the recent past, has rallied into earnings, sold off after earnings. So after earnings, possibly that might be the time to look for some kind of pullback into value, but it's too strong. It doesn't offer a good risk to reward ratio. Adobe, we closed under the 250, back over the 250. I didn't buy it here because the 50 RSI would have been too close. So nothing here. Advanced Micro Devices, monster day up 3%, just too high. I need some kind of pullback into value. Look for a V1 or V2. Oh, Wayne, hey buddy, how you doing? Good to see you. So I just did Apple, but yeah, I mean, Apple's just too high for me to buy here. I mean, this has been a monster trend. Trend followers have done extremely well, but like I just said, it needs to come back into value in order for me to get a good risk to reward. But I wouldn't dare buy it here, and I wouldn't dare short it here. It could just keep on moving up, or it could come down hard. But I have to stick with my filter, stick with my approach, and look for some kind of pullback. We'll get a pullback. We will eventually. I don't know when, but of course, Amazon. This is unbelievable. We came down here. I was really looking forward to buying it down here. We had a double bottom with a bullish divergence. We rallied. Please keep in mind, look what the RSI is, guys. 58.57. It got as high as about 50 and rejected. If I bought down here, I would be selling here today with the rejection of the 50. So a lot of people made a lot of money on here, so I would not be surprised we have some kind of pullback up here. I mean, I don't know what's going to happen, obviously, but this is a huge move from here to here for people. And, you know, if I bought down here and rejected the 50, I would be getting out here. And I imagine some people are also going to be taking that view. So nothing on Amazon here for me. Boeing. Down more. We are getting into position. You know, we made this low, rallied. People that bought here started to stall. They're getting out here. You know, we could have a V1 or a V2. If I had a nice V1, V2 that rejected the third ATR channel, I might be interested, but nothing there today. Caterpillar, big, strong day up there. Just too high for me to buy, kind of like Apple. Need some kind of pullback before I can even get interested. Dow Jones, nice move up today for sure. Nothing on the Dow Jones. Walt Disney, we have a V2 here today. It's not a high or low V2. It's actually a lower low. You see this low is lower than this. This was a higher low from here, but this is a lower low. Big, strong down bars, larger than one, approximately a little bit larger than one ATR. This bar, day one, is definitely larger than one ATR. So I wouldn't be taking this trade. I'm looking for Walt Disney down here in the 100. 200-day moving average, or to the upside, 10 crossing over the 50 would also be a good momentum to the upside. Of course, we have Etsy already. We took it yesterday with this nice V1, V2 combination over the moving averages over the 50. Hit one profit target today, so that's great. Ford missed on earnings. It's gone down, not able to rally today. So, you know, maybe down here at the 30 RSI looking for a deep dip buy. Facebook, not much on Facebook here. Not much on Facebook. 5 below. Did look like, no, we didn't. You know, I mean, we did come in the value zone, but I needed a couple days of sideways movement for me to get into this. So nothing on Facebook. Gold miners had that big day up. It looks like it's closing below the previous days, or below the open. Nothing there for me. Same with gold, but gold, we do have a 520 EMA cross. This is a mechanical back-tested approach, just like on the silver that I took yesterday. So I will be buying gold here with the 520 EMA cross. If it was up this high, close to the second ATR channel and this crossed over, I would not have taken the trade because it was too high in the channel. But now that it's back in the value zone, I am going to take this trade. So I'll have a smaller portion of silver today, and I will be buying gold today as well with the 5 crossing over the 20 with the price being here. And I already have an order in to buy that at the end of the day. So that's on autopilot. Just glad that I'm getting a better price here than if I would have, you know, intraday bought it up here for some reason. So 5 crossing over the 20, EMA is a good back-tested quantified approach to trading gold, and this will be mechanical. Google having a really nice day today. So any of you that have Google, congratulations. Keep in mind we have earnings coming up on the 28th. Goldman Sachs, big, strong day. This has been a big move ever since the, when did this happen? This happened back here. 5 crossing over the 20. That is a good back-tested approach. I know Steve has this. I believe Jesse has this. So nice trade today, guys. Really nice trade. And, you know, if you have this position, you might want to be looking to see how we react around the third ATR channel or how we react around the 70 RSI. So excellent trade. IBB, not much. Gapped up on earnings. Too high for me to buy. Looking for a pullback into value. Intel, monster strong day, up almost 8% on earnings. So some of these stocks have moved up really nicely on earnings. Some of them have come down very, very strong on earnings. So again, guys, just a reminder, it's not a great idea to gamble in front of earnings. And I use the word gamble for a reason, because it is a gamble. Russell 2000, of course, we bought that over the 200. We've been phasing out all the way. This is not a mechanical trade. This is a discretionary trade. So if we reject the 70 RSI above, or reject the third ATR channel, or reject the previous high, that will be a red flag for me to get out. To the downside, if we close below the previous day's low, I will get out. So Monday, if we close below today's low, that means I would get out. But we did hit one profit target there. Johnson & Johnson, nothing really there. Coca-Cola having a tough day down today, isn't it? So we have made a lower high now. We have, looks like we were very close to washing out this low. If we could, it's in the value zone. If we could get it to move sideways and then get a V1, V2, then I would be interested, but nothing there today. Lockheed Martin, nothing on Lockheed Martin. But it is setting itself up for a potential. If we go up on Monday, see this, we would have a V2. Here's day one, here's the day two. Day two washes out day one nicely, more than a quarter ATR. Monday, if we closed above day one's close, here's day one, day two washes out. Day three would be Monday, close above day one's close. This would be a higher low V1, and I might be interested there. But nothing on Lockheed Martin at the moment. How are we doing on time? All right. MasterCard, we're still in the range of this big, huge down bar, and we have earnings coming up, so nothing there. McDonald's, I did buy McDonald's here when we had the combination of the bounce off the 30 RSI and the bounce off the 200. I thought it was a good place to buy, and it was a good setup, but it did not hold, and I had to get out yesterday when it closed below the 200. I didn't want to. I'm like, dang, this is low enough, but that was my signal. I had to get out, and luckily I did. I mean, it's down another $1.50 today, and I don't have it. So anyway, and it's also at 27 RSI. I mean, can you imagine this on McDonald's? I mean, look at this drawdown from McDonald's. I mean, this is brutal. So for me, I'd be looking for a close under 27, under the 30 RSI. It's at 27 right now, and a close back above. Altria just has gone to the moon. Can't do anything with it here today. Too high. Merck, we had that big down day, big tornado day, maybe we'll start calling it. We've had a rally, but the people that bought here, once it got up here and started to get a little weak, they took the profits. That's why I'm not surprised that we're seeing a little bit of a pullback here. But if we could get a higher low now, V1, V2 back in the value zone, that might be interesting. Microsoft, just range bound. We had the 520 crossover yesterday. It doesn't back test very well, so nothing on Microsoft today. Netflix having a nice strong day today. I may look for a 5 EMA crossing over the 20 EMA on Netflix, but nothing there today. Nike, we had this huge move up, and then distribution. I mean, we came into the value zone, we couldn't even hold the value zone. Now we're lower and lower. Look at this confluence here of the third ATR channel in the 50. This might be an interesting place. Really what I'd like to see is it come down here, consolidate a little bit, then look for a V1, V2, or down here at the 100-day moving average. At the same time, we have a 30 RSI. That would be a really good sweet spot as well. Philip Morris, another monster, just heading up too high. Need to look for a pullback into value. Like to see it pull back to the 200-day, because the 200-day is within the value zone as well. So this would be a good play off of the 200 if we could get it to come back down there. PayPal did very, very well on earnings. Stronger today. It's over the 200. Can I buy it? No, I can't. It's just too high. It's over the second ATR channel. 90% of prices are going to stall out right here. It doesn't give me a good risk to reward. The Qs, of course, we have on the 520 crossover 2 profit targets today, which is nice. Silver, of course, we bought that with the 5 EMA crossing over the 20 EMA, and with the MACD crossing over at the same time. I was fortunate enough to get out of 40% of my position at the very top today when it gapped up. So it doesn't happen a lot, but that was pretty dang sweet to lock that in there. So this is mechanical. I'm going to keep this as long as the 5 is above the 20. The SPY, we had a small loss on the overnight trade. We'll be buying this again today. TLT, nothing there yet. Bonds weak today. Right down here around the 100-day might be interesting. 30 RSI, but nothing there now. Tesla is just unbelievable. Unbelievable how this is going up. Man, I'm glad I'm not short. So can I buy it up here? No, I certainly cannot. It's at an 83 RSI. Where am I going to buy this? Well, if we pull back down here one day. Twitter down again today. Well, this is what we were talking about, this volcano or tornado coming down. So we're at 18 RSI. So nobody really wants Twitter here. So nothing there. United Healthcare Group. Bounce off the 200. It's too high. USO. Oil. So it looks like Mert's doing well on oil. VIX, showing somebody the profit taking, but look at this right here, guys. We're at 32.83 right now, RSI. 32.83. Looks like we're closing underneath the third ATR channel, which is very, when that happens, that's very bearish to be able to close under the third ATR channel, because most of the time, like you can see, we get to the third ATR channel, it bounces. We got to the negative third ATR channel. We get to the positive, that's where it finds resistance. And so now we're at the third ATR channel, and it looks like we're going to be closing there. So I would be interested in buying some VIX if we go under 30 back over 30. Verizon, I guess earnings were not so great. Went down, recovered a lot. We are in the value zone. I'd like to see this move sideways. Look for a V1, V2. Walmart, okay, I did short that right there. Took profits there, there, and there today. It bounced off the 50 RSI, acting as support. So I am going to go ahead and just close out and lock in the profits on Walmart. Energy, very strong, up at the second ATR channel. Nothing I can do with that. Financials, very strong, up at the third ATR channel. Nothing I can do with that other than look for a pullback into value. Real estate, ooh, well, so look, guys, I mean, we moved up above the 1 ATR channel, the places that I do not like to buy, right? And we pulled back into value. So here it was above value. Now it's in value. Bar's too big, but if we could, you know, if we could get some, and we have a lot of support here, if we could get some sideways movement, have it stop going down, but just consolidate, move sideways, and then we have a spike down, an attempted down, and then rally back up, that would be interesting. XLU, same thing, back into value, and healthcare. So, all right, guys, give me about 15 seconds. Sorry, have to move the dog around real quick. I'll be back. Okay, sorry about that. I think the key word is when I say how I'm doing on time, that's when she knows she's making her move. Okay, so as far as potentials for today, really, in my opinion, it's gold, right? We have the 520 EMA crossover, that back test well, it's mechanical. Everything else is really a little bit too high for me to buy new positions here. Let's take a look at our current positions, which is more important than adding new positions. But, you know, Etsy's fine, you know, higher than the previous day's high, hit one profit target. Has not moved one ATR from my entry yet, so my initial stop still is going to be halfway of this washout bar going forward. IWM, totally fine. I am in trailing stop mode because we moved more than one ATR away from my entry, hit the one profit target there today. So tomorrow or Monday, if we close under the previous day's low, I'll get out. Silver, of course, we had that nice, beautiful gap up and scaled out about 40%. This is mechanical with a 5 over the 20. SPY had the small overnight loss. We'll be buying this again today at the end of the market. Q's, really great trade. 2 profit targets out. This is mechanical. And then Walmart. Walmart did bounce off the 50. I am going to be locking in this trade today as well. So looks like I'll make a yearly high today in my account. I don't know exactly what the final numbers are going to be. It's going to be close, but anyway, that's always a cause for celebration, right? So I already have everything. Locked in here. So I'm going to be buying the SPY on autopilot. Gold. I'm going to be buying gold on autopilot. I'm going to be exiting my short position on Walmart autopilot as well. Murat says, I see, like Amazon, Tesla missed a year ago and it dropped huge at the opening and closed it in one session since most liquidity was at the price point where it missed the earnings. Oh yeah, Amazon, huge day today, Jackson, huge monster. But it did, at least right now, it has rejected the 50 RSI. It's a 40 RSI. Greg, for the moving average, this is Bing He. Hey, bud, how you doing? Bing He says, Greg, for the moving average backtest, if you use a different start date, would the results be different? Can the characteristics of the stocks change for years? Yeah, of course, yeah. If you change the start date, sure, it would definitely change. But you want to use as much data as you can, and it goes back to 2000. So, you know, we want to look at the biggest picture we can. But yes, if I changed it, of course, the results would definitely change. Murat, Greg, don't you think that the way the gold is closing is not very bullish? 100%, 100%. But this is a mechanical approach, right? I mean, I 100% agree with you. But I do like that we're back into the value zone. MACD as positive, but I agree, you know, and if you wanted to have like a manual override where you didn't take it, remember, I would have a manual override if it triggered up here. I wouldn't take it, but it is back in the value zone. So I am going to take it. Steve hit all-time equity highs today as well. Congratulations, my friend. Congrats, Steve. Way to go. Very, very nice. You know, for us traders, that's a big deal, right? That's a big deal for us. Big deal for me, but of course that's my life, right? All right, so we have about 9 seconds. Boom, boom, boom. All right, so I bought gold at 141.86. SPY at 301.60. And I should be out of Walmart, and I am. So good trade on Walmart. Good short trade on Walmart. All right, so our new entry is gold. And you know, Murat, the other reason too on gold that I'm factoring this in is that I do have equities, right? I have Etsy, I have IWM, I have SPY, I have Qs. So having a little gold over here and a little silver, I don't mind, just to diversify it up a little bit. With the proper signal too. But we shall see, right? We shall see. So that's our new entry on gold, 141.86. New entry on SPY. $301.60. So there we go. Etsy, one profit target, one profit on target on IWM, 3 on SLV, small loser on SPY, 2 on Qs, and the new entry on gold. All right, well, it looks like Steve Burns bought gold as well. He actually bought UGL, which is the double leverage gold. So Steve did buy gold today as well. So I'm in good company with Steve for sure. So, all right. Well, listen, if you guys have any other questions, comments, want me to look at something, please do. Before we get to that, I hope you don't mind, but I just need to do my quick end of day plug and let everybody know that I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time. I offer a 10-hour course, 5 2-hour Skype sessions, live, one-on-one, you and I. The format of those lessons basically is the first part of the lesson I teach, second part I have you teach it back to me. And one of the best ways to learn something is when you have to know it well enough to teach it back to someone. But I think it's a great course. I've had really good success with my clients. We talk about trading psychology. We set up an actual real plan for you. I teach you everything I've learned from over the last 24 years, and it's intensive. It's one-on-one. So like I said, I've had great success with my clients. I think everyone who's ever taken the course has been, really happy they did and thought it was a good investment. So if you're interested at all, please let me know. You can reach me. My email is in the description of this video. You can also reach me, send me a message on Twitter. And I usually, if you're interested, what I like to do is I like to kind of have a quick interview call with you, 30-40 minutes. It's free on Skype, and I just like to learn a little bit more about you, what got you into trading, how you've been trading, what your challenges are, what your goals are, and then I'll put together, with that information, I'll put together a lesson plan and create a plan for you based upon that. And then of course you can interview me, ask me, any questions that you want just to see if it's a right fit. So if it's of interest to you, please let me know. Just reach out to me, email or Twitter. And then if you like today's podcast, I would really appreciate it if you would hit the thumbs up button. It does help promote the channel on Google and YouTube. And there's a lot of people out there that do need help with trading, learning good trading principles. And, that's what I try to do on this channel. So, you can help me help them by all you have to do is hit the thumbs up button. If you want to go above and beyond, share on social media, that would be awesome as well, right? So, all right. Well, let's take a look. So Steve hit all-time equity highs. Congratulations. That is absolutely fantastic. Jackson, all equity highs. Break out the non-alcoholic vodka bottles. That's right. Did you hit all equity highs also, Murat, or are you talking about Steve? He said, you already have SLV, you would still take gold. Yes, I would. If I had had a full position of silver today, I may not have taken the gold, but because I got out of 40% of it at the open today, that's why I did take gold. Because I had a much smaller position in silver. But if I'd had a full position in silver, I probably would not have taken it. Jackson says, guys, I'm relative newbie to trading and young in my trading journey, but I've scoured the internet, and I must say I appreciate Greg's approach and openness. So highly recommended. Well, thank you, Jackson. I appreciate it. And Jackson is currently one of my students. We had our first lesson, and we're going to have our second lesson on Monday, my time. Anyway, that's Tuesday, Jackson, because he's in Australia. So I'm looking forward to that. But, Jackson, in the meantime, between lessons, it's a really good idea to go back and watch the recording of the lesson, because when we do the lessons, it's on Skype, you can record it. So I think it's important you, at the very least, go back and watch our first lesson and just kind of reiterate and absorb, what I taught you in that lesson. Merritt says, no, it was meant for Steve. Okay. All right. So, upcoming weekend, glad for that. Seemed like kind of a long week. One thing I do want to say is, guys, that with, the market going up, being strong, be patient. Don't get caught up into the euphoria of something moving up. I mean, get in a position if you have a good risk to reward, everything meets your criteria, but, we're starting to extend. We're starting to get above the 1 ATR channel on a lot of stocks, getting higher and higher. And, here I'm just looking at SPY, for instance, getting up to this third ATR channel, very likely we're going to find some resistance. I don't know that for sure, but statistically, that is where it stalls out. And of course, the SPY. So I really don't like to buy at these high levels. If I have a position, yes, sure, I will keep it. But initiating a new position up here is a whole different thing. Jackson says, I think being open and transparent is so important. By the way, Greg hasn't paid me to say this, but thanks, Greg, so far. I'm learning a lot. Oh, good. I'm glad to hear that. No, I have not paid Jackson. Thank you, though, for the kind words. And Jackson says, every day, watch twice already. Perfect. Perfect. So let me see. I hope I answered your question, Bing He. Yes, I took gold even though I had silver, but it's because I phased out so much of silver today. That is why I took it. So it's like having 1.5 positions essentially. Yeah, you're right. It was a V2, Jackson, on Intel. I would not have taken it because it was so close to the 1 ATR channel, but of course we had earnings also. So for sure I would not have taken it. But good eye, it is a V2. Josh says, Thanks for this, Greg. I look forward to watching more of your channel moving forward. Found you from Alpha Mind. Oh, thank you. Thank you very much, Joshua. Yeah, that was the Alpha Mind podcast with Stephen Goldstein. Really like those guys and Mark. And yeah, that was fun doing that podcast. And I'm glad you came over. And by the way, Josh, in the description of this video, I have a link to 4 of my lessons on YouTube. Talk about my indicators, V1s, V2s, my entries, position size, or profit targets, all the stuff that I talk about here, but in detail. And, if you want to learn more, they're free. The links are down there. They're just on YouTube. So, if you want to keep coming back to the channel and maybe have a little bit more in-depth understanding of what I'm talking about, click on those links and watch them. I only have an hour here, so I can't go into real detail, but they're free and they're down in the description. So, but I appreciate you coming, Joshua, and I'm grateful to Alpha Mind for having me on. So next week I am going to be looking for VIX. I'm going to be looking for VIX under 30, over 30. And I don't know if you guys remember, but our last trade on VIX was a monster. It was a 14 percenter. I didn't get all 14% because I phased out, but our last trade was here. We went under the third ATR channel over. We had the V1, and we went all the way up and scaled out right up to about here. So I've had two of those big trades on VIX this year, and just being patient, waiting for this to get down here. But we're getting close to the 30, so I'm definitely going to be looking for that. Josh says, have a great weekend. You too, Joshua. Appreciate it. And you did see the links to be watching. Great. Bing He says, your mind is very clear. At the last minute, you decided to take gold. You already considered everything. Don't you miss out certain things before and regret taking the trade? I made such mistake often. Okay, let me see if I understand that. Your mind is very clear. At the last minute, you decided to take GLD. You already considered everything. Don't you miss out certain things before and regret taking the trade? Well, I try to think all of that through, Bing He, and one of my main goals every day, actually the main goal that I have every day, is to not buy something, sell something, take a position, sell a position, and then in the heat of the moment, and then when I'm done and I go out on my walk and I think about it and I regret it. That is my number one main focus goal of the day, is not to regret anything that I did during the day. And so because when the market's getting ready to close, sometimes you are a little impulsive because you're up, maybe you have 30 seconds left and you have to make all those decisions. But I try to think that out before the podcast. I try to take everything in consideration. And like the gold trade, right? I mean, I knew that I had gotten out of a large position of silver, and I looked like gold was going to, and I thought, do I really want to take this gold? And then I went, no, I'll take the gold because I already got out such a large percent of silver. So, try to think things out before you're in crunch time at the very end of the market. Think it out. Say, okay, I don't want to make any bad decisions here, have any regrets at the end of the day. So, before the market closes, an hour before or 2 hours before, think all these things out while you have time to think. Don't have to try to calibrate everything and figure out everything in that last second. Jackson says, Greg, I know you have a hike, keep active, but is there anything you tend to do routinely outside of trading you consider important? I think eating correctly is important. I mean, I think exercise and eating correctly is important. In addition to going on my hike, I mean, I think about the trading day on my hike. So I do some mental things where, I go back through everything that I did, kind of replay it in my mind, and kind of like what I was just talking about with Bing He, I do that just to get a sense of, okay, is there anything that I regretted? And most of the time I just don't. I mean, like everything I did today, totally fine, right? I mean, I'm happy with it. I'm happy with the gold trade. Doesn't mean it's going to work out, but yeah, I mean, eating well, sleeping well is very important. And just like in sports, after a game, people replay, they watch film to see how they did. And that's what I do every day too. On my hike, I think back through, did I do anything wrong? Was I impulsive? How can I improve? Jackson, it's the hike. It's a huge part of my trading. The hiking, getting the exercise, going to the gym, eating correctly, and being mindful and thinking back about each trading day. Murat says, Greg, since you are a full-time trader, what do you do during the day before the last hour? Looking at the charts as they open, are you up when the market opens? Absolutely not. I am not a morning person, Murat. And that is one of the reasons why I'm an end-of-day trader. But that works out for me because I think being an end-of-day trader is the way to go anyway. But no, I go to bed about 2. I get up about 9 or 10, get ready for the podcast, do all this stuff on the internet and letting everybody know when it's going to be and so forth. But I spend a good 2 hours before the podcast looking at everything, going through everything, calibrating everything, vis-a-vis how much correlation, risk to reward, all that kind of stuff. So when I'm going through these charts, I'm not doing it for the first time of the day. I've done it well before. But no, I don't look at the open because I'm just not up. But like I said, I do spend a couple hours going through everything, so that I know exactly what I'm going to do on the podcast. I think it's important, like I just said, though, that you go through everything beforehand. You think about all the complexities of risk to reward, correlation, so that at the last 5 minutes or last 3 minutes or the last 30 seconds, you've already decided what you're going to do. And you really have a plan what you're going to do. Because if you got up, if you got home, you had 20 minutes till the end of the day and you had to run through your charts before the market closed, I don't think you'd make as good of decisions. I think you need to think that all through when you're calm and you're not up against time. Jackson says, I may be young in trading, but I think that lifestyle completes the full circle and this affects your whole game. Yeah, of course. 100%. If you're having relationship issues or other issues, it's going to affect your trading for sure. I think there's entire books written about this, about, how people punish themselves with their trading subconsciously, all that kind of stuff. So, it's important that you have a balanced life, eat well, sleep well, exercise, have time to think, meditate, and have time to really think out your plan for the day. Murat says, when I have a position, I always wait until Asia opens to see the price movement from 2 to 3 a.m. and I see the Asian sessions. Aha. That sounds good. That sounds smart. JT, hey, how you doing, JT? JT says, I keep a trading journal in Excel with comments on why I bought and sold plus the mistakes that I made in bold red. Oh, that's excellent. Yep, that is really excellent. And it is important to keep journals and write stuff down. And like JT says, write down the mistakes that you made. Because when you look back at that journal and you see all those mistakes, it helps you go, oh, there's a pattern there. But best advice I can give, guys, is think it through beforehand and make it your goal at the end of the day not to have any regrets, not to go, why did I buy that at the end? I know the market was closing quickly, but did I really think that through? Remember, guys, we're trading for the long term. We're not just trading day to day. Right? We're not trading for trying to make a lot of money today or this week, right? Seriously, if you guys said, okay, you have to make money tomorrow, you have to pick a trade to make money tomorrow, I probably couldn't do it. Greg, you need to buy a new jet ski, right? And you have to do it in a week. I'd most and likely end up making money if I had that kind of time pressure, or losing money if I had that kind of time pressure, right? But if you said, hey, do you have enough to buy a jet ski or something at the end of the year? I think there's very high probability that I would be able to do that because my process will play itself out and I'll take advantage of the edge. But in the short term, you press me to make money on something in 3 days, probably wouldn't happen. Thanks, JT. That's really good input and a great contribution. So yeah, guys, keep a journal. And I like that idea of putting your mistakes in red. Do you have a lot of bold red stuff going on, JT, or is it getting better? Murat says, when I have crude oil position, I always wait until, oh, I already looked at that. All right. Well, great day, yearly high, good week. So yeah, happy and grateful for all of that. Beautiful day here. Gonna go out with Katie. Go on a little hike. Murat says, I shorted oil last night and it was moving in my direction. It just did what one of the two things I was expecting. It just moved 70 cents down in 5 minutes and back up again. Went long from short. Okay, wait a minute. It just did one of the two things. It just moved 70 cents down in 5 minutes and back up again. Went long from short. Aha. So you're short or long now? Were you short on the move down and then you went long? JT says trading improved a lot. Yeah, for sure. It's these small things. There's all these cycles that we get into, repetitive cycles that if you don't write it down or analyze it, you don't see. But if you write it down, you can see there's a pattern, there's a pattern, there's a pattern. And the other thing too is sometimes I listen to the replay of the podcast, which is kind of strange to hear yourself speak for an hour and a half. But I try to get in the mindset of like, okay, I'm just a listener. I don't know much about the market. Is this guy explaining things well? And then I also kind of analyze myself as well and go, okay, is that clear thinking what he's saying? And most of the time, it seems like it is. All right. Well, I'm going to get out of here. Jackson, thank you so much for coming, my friend. Appreciate you being here. Thank you for your input. And yes, I'm looking forward to our session next week. JT, thank you for your input today. And thank you so much for coming. It's always great to see you here. Murat, my friend in Norway, thank you for coming. Always great. You always have good contributions and good information. And I really appreciate you coming. Let's see, we have John. Thank you, John. Appreciate you coming as well. And I thank you, and I hope you have a nice weekend as well. Bing He, thank you for coming, my friend. Hope you have a good day in Singapore. And, keep in touch. Let me know how things are going with your trading. Joshua Kaufman, great having you here. Thanks for coming by for your first time. And if you have any questions, please let me know. Steve Burns, congratulations, my friend, on the equity highs today. Proud of you. Thank you for everything that you do. You really do a lot of great things and help a lot of people with your books and your website, newtraderu.com, and all your Twitter posts. And thank you for everything you do, and appreciate you being here as always. Wayne K, I hope that helped on Apple. Not much there. It's just really too high for me to do much with. But it's great seeing you again. I hope you have a nice weekend. Be safe. Jesse. Okay. That scrolled by. I didn't see it. Took TSN and Etsy yesterday, both performing well at the market. What about Goldman Sachs? Do you still have Goldman Sachs, Jesse? Hope he says yes. Although we did have that V1 to the downside. Maybe he got out yesterday. I'm not sure, but let me know. But thank you, Jesse, coming by. What is TSN? Oh, you took the Tyson, the under, the over with the V1. Fantastic. Yeah, we talked about that. And then Mount Doji, LL looked really good. Glad to see you. Thank you for coming by. Hope you have a good weekend. And I think that's everybody. John Cortez, thank you, sir. Appreciate you coming by. If you have any questions, please let me know. Oh, Gamer Squad, hey, bud, how you doing? Hope you're doing well. Keep us up to date on what's going on with you, and thank you for coming. And I think I got everybody. Yeah, 2 G's on the Greg. Thanks, Wayne. So, anyway, Jesse, hey, if you're still out there, let me know. Do you still have Goldman Sachs? Maybe he had to run, but, yesterday we did have that V1 to the downside, so it could have been a bit of a red flag. And, somebody wanted to get out there. I definitely wouldn't have blamed him with the rejection of the 1 ATR channel and the V1 to the downside. So anyway, I don't know if he still has it. Of course, I want him to have it because it was up today. All right, everybody. Well, listen, have a good day. Have a nice weekend. Be safe. Do something nice for somebody. And hopefully we'll see you all again on Monday during the last hour of the market. So take care now. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.